live yet until the light goes on. There you go.
Okay. Good evening. So tonight I am filling in for Mayor Gallo as chair for tonight's Committee of the Whole. So I'm told I need to read this. The floor will be open to the audience for 20 minutes to address the City Council on matters that are on the agenda after the City Council discusses with staff. We ask that persons wishing to address the City Council keep their comments to 5 minutes in length. Comments must be addressed to the council as a whole through the mayor, and profanity may not be used in any form. So the first item on our agenda for tonight is fiscal year 2020 city audit, and I'm going to defer to Finance Director Melissa Gallagher.
Thank you, Mayor Pro Tem. Good evening, City Council and Mayor. Tonight, before I turn it over to our city's auditor, Jamie Wilkie of Lauterbach and Amen, I wanted to prepare a couple of opening remarks and let you know what's in the council packet itself. Because it was a unique year, I did want to kind of summarize a couple different items. The COVID-19 pandemic is a public health emergency, as we know. Unlike anything that we have ever in our lifetimes have experienced, and put in an enormous pressure on budgets across the state and localities. Our residents and businesses faced hurdles and challenges over this past year as they adapted to a new environment. Actions to contain COVID-19 virus in Illinois, we followed state guidelines, closed non-essential businesses per state guidelines, restricted travel, and there were displaced workers from their jobs. Stay-at-home orders and then restrictions on capacity also slowed businesses. It limited the economic power overall for our local communities. While measures were in place and intended to slow the spread of COVID-19, it did present lots of challenges for our communities. Our keys to success here at the City of Rolling Meadows have been a very strong combination of social distancing in our strategies across the City Hall in all our buildings. It protected customers and then also our employees and expanded some technological advances as well. Rolling Meadows employees have demonstrated outstanding professionalism and commitment to high quality services across the entire city. It was a very difficult and uneasy time, and we appreciate everyone's efforts, the City Council, all our city staff, and the community at large. The city communicated information across different platforms. We used our city's website, our social media platforms, our city's news and views, our electronic community signs. There were many different ways that we were able to communicate with our residents and our businesses. In addition to that, our business messenger and our RM Business Buzz were created to also create more communication with our residents and our businesses community. The City Council was also a vital conduit for communication with our residents and our businesses. The COVID-19 economically sensitive revenues, in our general fund particularly, were impacted by restrictions. Revenues such as food and beverage taxes took a hit. Motor fuel taxes, sales taxes in some regard. On the flip side, we did have some advances in local use tax because there were so many online purchases. Property taxes do continue to remain strong and provide a revenue stability for our city, as in past years as well. We receive approximately 100% of our tax levy, so it continues to be a very stable component of our entire city. The city's cost containment measures also helped us provide stability over the last year. In April 2020, the city estimated about a $2.9 million revenue loss to the general fund. The City Council and management took early action to anticipate possible revenue losses, and we were able to use reserves because we have been so careful about our financial planning over the last several years. We were able to release committed funds from the general fund. We were able to transfer funds from liability and health insurance funds. We also were able to provide some resources for the community as far as business assistant programming, and then also a grant to the Salvation Army for $25,000. We applied for available funding across wherever we could for grants, in particular for COVID-19 related reimbursable items. we were able to achieve about $340,000 of CARES Act funding, and we continue to receive word from the FEMA group that we'll particularly, hopefully, receive some sort of reimbursement, although we did not receive yet from FEMA. The general fund ended in an overall fund balance of a 33.3%, the very top range, and Jamie's going to talk about that as she reviews the audit with you. But that's commendable considering where we were sitting a year ago thinking about so many different components. When we look at the budget revenue loss as we compare actual to budget for the general fund, it was at about a $1.1 million loss when we look at the overall budget. Providing essential services and quality services continue to remain a very large component in look at what we do. We are looking forward in a long-term approach overall for the city, and it does continue to be something we're looking forward to as the city opens up. June 11th, of course, with the new state guidelines, we're hopeful that we'll continue down the path that we're moving towards. I wanted to, before I turn it again over to Jamie Wilkie, our city's auditor, in the packet itself, we have several items that we thought might be interesting, not only for the city council, but for residents who are listening in. We have an audit preparation timeline within the packet. This is an audit process that takes from January to December every single year. But due to COVID-19, our core planning process actually started in October. We usually have an interest meeting in December, but we decided to start it a little bit earlier. So we consulted with Jamie, and she said, no problem, let's get on a Zoom call and start the process earlier. With that, we started some initial thoughts and started planning for the audit. We do complete the audit work throughout the entire year, but the bulk of it really starts from last year in October all the way until now as we present the audit to you tonight. The city's audit entrance meeting then took place in December, and thereon began the work of the audit. Finance department is extremely busy during this time, as we are all of us throughout the entire city. All our city departments are very involved in this audit process. In the audit preparation timeline, I just wanted to mention a few things. We have a summary of the major items. We have additional coordination amongst our third-party required items. We have a highlight of each month, and again, it's just a highlight. And then we also have the requested materials from the city's auditors, and that is straight from the audit packet that we receive at the entrance planning meeting. It's really important for you to know what it takes to provide a 200-plus page audit. There are lots of stakeholders that are involved in this audit process, and when we're finished with the audit, we provide this audit not only to the state of Illinois, but to the federal government, many agencies out there, the SEC. We have many items that we have to then complete for the audit process, and that's on the last page of the audit summary. In the packet itself as well, we have the audited fund balance summary, which at a glance will tell you all of the funds, ending fund balance for the previous year, revenues in, expenditures out, transfers, and then the audited ending fund balance at a glance so that you're able to see that and review that. The audited fund balance review just for the general fund is in your packet as well at a glance so that you can see where we landed for the year. We have an audited fund balance review of the general fund, the 911, the refuse fund, and the garage fund, again, so that you can see at a glance. We did hit all our fund balance target policies. We are going to talk a little bit during the budget parameters discussion about how we're going to review some of those fund balance policies, but for now, I did want to just highlight again, for the general fund, we ended at 31.9% for the year when we're looking at unassigned fund balance. The refuse fund is a little bit on the lower side, so 30%. That's more of what we need to discuss. The 911 fund, we're right on target, a little bit above, but we are planning for those future expenditures, and that's something that we'll talk about later in the evening. And then the garage fund is right on target as well at $1.4 million. Also in the packet is the general fund, or the outstanding debt service payments overall. We like to make sure that you see that debt service schedule all the way out to 2039. So those are the items within the audit packet for tonight. With this, I'm going to turn it over to Jamie Wilkie and let you take it from here, Jamie.
Thank you.
And I'll be your Vanna over here.
You'll be Vanna. Okay. Great. Good evening. Thank you for having us this evening. I know Melissa has already covered really a wealth of information that's been provided in the packet, but certainly I want to highlight a few other key sections within the audited financial statements and certainly open it up for any questions that you all might have this evening as well. So we have just a brief presentation. It will provide some page number references as well as we go through the discussion. The focus here will be starting with the larger audit document itself. But again, if there's questions along the way, please feel free to interject and we can have some side discussions as we go. First of all, I'd like to thank, obviously, the city staff. Melissa alluded to the fact that this is a pretty labor-intensive process from start to finish. We did kind of start early this year with a lot of our larger municipalities. There is a lot of coordination. Obviously, staff has been kind of pulled in other directions during the pandemic, so we wanted to make sure planning for the audit was definitely early and a priority. So I can't reiterate enough how well prepared the team is here. We always expect to come into a clean audit process. Documentation is always well organized, provided timely. We always have good back and forth communication. So I hate to say that that's not the case every community that we enter. So I think it is a significant and big deal to make sure that council is aware of, all the hard work that's put into preparing for the audit. So thank you, Melissa, to your team.
Thank you.
They did receive the Certificate of Achievement Award, so that is something that I want to briefly explain. The Certificate of Achievement for Excellence in Financial Reporting is really the highest level financial reporting any government entity can have. That program is administered by the Government Finance Officers Association. There is about 1.5 inch thick checklist that we have to go through on an annual basis to make sure the annual audit meets all of those criteria. And certainly it's viewed very highly by bond rating agencies, outside parties. There's really a wealth of additional information that's provided in your annual audit as part of the requirement of the program. So last year's audit earned the award. We will again be submitting this year's audit as we wrap up the final version of the report, obviously anticipating receipt of the award for the December 31st, 2020 audit as well. As part of our process, we are required to assess the overall internal control environment. So while we are not required to provide an opinion on internal controls, we are required as part of the financial statement audit to take a look at that overall control environment. So that analysis is basically saying, can we rely upon the policies and procedures that have been put in place to make sure that the financial transactions that staff has presented to us are in fact accurate? Certainly any red flags, findings, areas of concern, issues with things like segregation of duties, areas where we feel like there would be deficiencies, those would certainly have to be formally communicated to council and certainly discussed this evening with you as well. We're happy to report we have no internal control findings. So when we talk about a truly clean audit process, this is it. It's an unmodified opinion. It's the Certificate of Achievement Award being earned, and it's no internal control findings. I do want to point out on the next slide then, we have the copy of the award we discussed, so that you will find in the audited financial statements on page 15 of the document, so certainly wanted to point that out as well. Pages 18 through 20 of the annual audit then provide our actual audit opinion. As I stated, it was a clean, or what we call unmodified opinion, which is the highest level opinion that any government agency can obtain. The audit itself is really a twofold process. So I discussed briefly the idea that we are coming in to also assess internal controls. That's kind of part one of the audit process itself. Part two is really that opinion stating that the financial statements are in fact materially correct. So the city earned an unmodified opinion with no internal control findings. As we flip through the report, the very next section is what we call management's discussion and analysis. This is covered on pages 22 through 41 of the annual audit itself. This is probably one of the most important sections of the document. As Melissa alluded to, it's over 200 pages. It is a lot to digest. And unfortunately, as time has gone on, the Government Finance Officers Association and the Governmental Accounting Standards Board are constantly kind of rewriting the rules, I will say, or creating new standards that we have to adhere to. And unfortunately, with a lot of those standards, we end up adding pages to your disclosures, which means the reports over time have just gotten bigger and bigger. So the goal of this section of the report on pages 22 to 41 is to really serve as the executive summary to the document. This section is intended to provide high-level financial overview, trend analysis. Obviously, for this year, you're going to see a lot of discussion of the pandemic impact and what that meant as far as revenue trends, effect on expenditures. Melissa alluded to the discussion of fund balances, and I just want to reiterate that the general fund, while still going through the pandemic, was actually able to end on a healthy note at that 31.9% kind of reserve balance. So just to reiterate that, still all the funds being in compliance with those fund balance reserves. For any of you who haven't yet gotten through the audit, I would encourage you to focus on this section of the document. It will really serve as that executive summary to the report. I've provided also just a couple of high-level charts that are also included in the management discussion and analysis. This is truly the kind of big picture, where the city ended the fiscal year December 31st, 2020. As we take a look at your governmental funds, what's our split of revenues? And obviously for many of our communities, you want to see that diversification of your revenue base. So we've got property taxes coming in at about 43%. You have other taxes such as sales, income, telecommunication, covering about 36%, charges for services at about 14%, et cetera. So really this is kind of graphically showing that, part of weathering the storm of the pandemic was the ability to have some of that diversification as well. Total expenses are provided in the right chart. For any community, you can probably guess the two big departments. They're always public safety and public works, so no surprise here. Public safety coming in at about 69% of total expenses for our governmental funds, and public works, coming in at 18%. The last section of the report I do want to point out, because it also provides a wealth of information, is provided on pages 186 through 223. It's what we call our statistical section. When we talked about the Government Finance Officers Association award program, this is actually one of the add-on sections that you are required to include, really for transparency purposes. So within this section of the report, you're going to find all kinds of 10-year trend information. The topics that are covered are listed on this slide. So you'll find information on financial trends, revenue capacity trends, so things like property tax rates, collection rates, et cetera. Your debt capacity, so what does our long-term debt structure look like over the last 10 years? Demographic and economic information, so for example, number of full-time employees over the last 10 years. And then we enter into operating information. So that would be things like operating indicators, number of police calls, number of, miles of streets that were repaved. So I know from any council member's perspective, there really is a nice kind of history of the city that's provided within that very last section of the report itself. That kind of ends the presentation on the actual audited financial statements. I certainly would be happy to open it up for any questions or discussions at this point, if there are any this evening.
Thank you. Any questions?
Okay. I think the last document in your packet of audit-related information is the management letter or required client communications. Just to note, we have provided an update as we do each year to prior comments. For the city, a lot of the comments that have previously been given we know they're not going to be fully implemented within a 1-year period, but I do think it's important to be able to provide those annual updates of where progress is being made. So I was not going to go through them in detail tonight. Certainly happy to answer any questions. You know, my example is the TIF fund. TIFs traditionally operate in a deficit until the end of the life of the TIF, but certainly we want to provide each year kind of the annual update of where that fund sits. We did have one new recommendation for this year, really a housekeeping item. This is not an internal control issue. This is not a reporting issue. We have a cash account that was noted that is split between multiple funds of the city. Some over time, obviously, as you're writing checks and deposits go in and out, there are times where certain funds own a more positive balance and certain funds own a, in theory, negative balance of that cash. So typically we like to see that kind of hover, you know, relatively close to meaningful numbers. At this point, just given activity, we probably need to reassess and take a look at maybe structurally moving some of those dollars between various cash accounts so it doesn't look so wonkety with some of those negatives and positives. So this isn't a bank reconciliation or a finding issue, more again of just a housekeeping type of comment. And again, happy to answer any questions on the management letter or communication letters.
Any questions from council?
All right.
Okay.
Well, thank you. We appreciate it.
Thank you so much. So our next agenda item is the actuarial discussion on the police and fire pension. So again, we're going to defer to Director Melissa Gallagher.
Thank you, Mayor Pro Tem. Before I close out, I just wanted to say thank you very much to your team, Jamie. It's a pleasure to work with your staff, and we appreciate the additional, especially during COVID-19. And just to close out, too, for council, so that you understand, too, our work doesn't end because Jamie's team and finance will finish off completing all the filings for the city's audit, and then we'll post the city's audit on the city's website by June 30th. We will have bound copies by June 30th, so if there are any city council members that wishes a paper copy, of course, City Manager Krumstock and I can deliver those to you. But that's around June 30th. Because it is such a large document, a lot of times people do like to read that. And again, the last piece to that is we provide a mini audit, as we like to call it. It's really a citizens financial audit that we post to the city's website that at a high level provides citizens with an at-a-glance of all of the financial picture from the city's audit. So those items will be presented or published to the city's website. Oh, and I should mention that too, because Jamie and I had a conversation that when we work towards August Committee of the Whole meeting, we'll talk about this during the budget parameters, but it's timely to the audit, is that we're also looking and reviewing our fund balance policies. And so we're looking at the utilities fund, the liability insurance fund, the health insurance fund to formulate fund balance policies. And then we're also going to just make sure we're taking a look at all our fund balance policies as we do on an annual basis to review them. And then their team at Lauterbach and Ament will assist as well. So thank you very much. So then, as you had mentioned, we're moving to actuarial discussion on police and fire pensions. We do have Kevin Cavanaugh from Lauterbach and Ament, and he is here tonight to present information and data about the city's fire and police pension funds. This discussion really should be titled The Recommended Contribution for the 2022 Budget, and it's based on the city's funding policy and how we have consistently improved the city's position for fire and police pension funding. The city's funding policy, and I'm just going to make a few opening remarks. I really want to make sure that Kevin has enough time to go through everything. But the city's funding policy has really improved the funded status. We're continuing to work towards about a 70% funded status. That's our goal. Right now, we're at about 58% for the fire pension. It was 51% last year, and we're at 64% for the police pension. It was at 60% last year. Again, it's the consistent practice of sound funding policy as we move ahead. We fund at 100% of the liability over a 15 to 17 year layered amortization approach. We also make sure that we're on top of the actuarial models for mortality tables. We have a long-term approach with our fire and police pension funds. And in years past, we have been able to, as the budget allows for and as reserves allow for, make additional contributions to the funds. And I think that's been really important as we've incrementally changed and gone for the better for police and fire pension funds. As we know, and just to summarize again, police and fire pension funds are all governed by the state statutes, Article 3 for police and Article 4 for fire. And each fund has its own board. Each fund has its own investment consultant and investment policy. However, despite the separation of the boards, we still hold the liability as the city and have to report all of the financial results within our city's audit, because ultimately we fund as a city and we sound financially fund the both pension funds. There is a lot of information within the body of the city's audit that relate to both police and fire pension funds. In particular, one of the things that shows over time our sound as a city, or as our sound funding policy, is that we've been able to not only maintain our credit ratings from Moody's and S&P, but we've been able to increase our credit rating agency ratings. And I think that's really important because both of those credit rating agencies have signaled that we have sound funding policies. Again, it's a long-term approach that we're looking at. And with that being said, I would like to introduce Kevin Kavanaugh, our actuary for fire and police pension funds.
Thank you, and thanks for the introduction, Melissa. So as Melissa mentioned, I'm here to go over the results for the actuarial reporting for both the fire and police pension funds this year. Just a quick kind of a process overview so that everyone understands the annual process we go through to derive at these figures that I'm about to present. We collect data that is required to be submitted by each of the pension funds to the state of Illinois each year through a compliance filing. So when we go over this year's results, this is going to be based on census data as well as financial information as of the fiscal year end. So that's as of December 31st of 2020. Anything that happens subsequent to that date, we always capture that in the next year's valuation. So in terms of timing, I'm sitting here today. We're in mid-June now, going over the results of this year's actuarial reporting for the fiscal year ended December 31st of 2020. The intention of going over these results is to provide the city with a basis for the tax levy for this year, coming up in November, December of this year, to make the contribution during the next fiscal year to each of these pension funds. So keep in mind with this process, there's really essentially a 2-year time lag between when we develop a recommended contribution and when we expect those dollars to come into the pension fund. Everyone who wanted one should have a copy of this presentation I've got here. It should say on the front, City of Rolling Meadows, Illinois, Firefighters and Police Pension Fund Reporting. If anybody doesn't have a copy and they need one, just if you want to raise your hand, I'll make sure I can get one over to you. Right. So if you turn to that first page in that presentation, I'll have the bottom line results for this year. So for this year, our recommended contribution for the fire pension fund, we're coming in at $4,256,827. For the police pension fund, $3,625,940. For a combined recommended contribution this year of $7,882,767. You'll notice that compared against last year, it's actually a slight reduction to that recommended contribution. In aggregate, it's about a $22,000 reduction, or in percentage terms, that's about a 0.29% reduction. If you look at, we also have the development of the statutory minimum contribution on the third line down on this page. You can see that on a statutory minimum basis, the required minimum contribution across both pension funds is about $5.7 million. Compared to that recommended contribution of the 7.8, that puts the city really about $2.2 million ahead of the curve between that statutory minimum and what the recommendation is for this year. If we look at the total unfunded liability across both pension funds, sums to a total $75.93 million. That's a pretty nice reduction from last year's unfunded liability of $76.95 million. And you can also see corresponding increases to the funded percentage year over year, with the fire pension fund increasing in funded percentage by about 3.31%, the police pension fund increasing by about 2.35%, for an aggregate increase in funded percentage of about 2.8% across both funds. So as Melissa mentioned, with the city's goal of targeting that 70% funding, you're really starting to see this trend moving in the right direction as we see this increasing funded percentage on both funds. And a lot of that's driven by the fact that the city does their part to make the recommended contributions to each fund, in addition to other factors as well. If you turn to that next page on slide 3, this is going to detail out really all the different factors that impact the development of our recommended contribution. So you can see on a line-by-line basis the impact that each one of these items had. Just in the sake of time, I'll just go over the totals across both funds, and then certainly if anyone has any questions, we can always dig deeper there. We expected to see an increase this year across both funds of about $257,000. That's based on the funding policy that's in place. So if you were to ask me, say, hey, for next year, what would you expect to see for an increase? I would expect to see about a 3 to 4% increase in the recommended contribution from this year. That being said, there's always factors that can lead to volatility in the development of the recommended contribution. You can kind of see that reflected with these next two line items here. So during this fiscal year, we saw salary increases come in greater than expected, led to about a $39,700 increase. The actuarial experience primarily consists of the demographic changes across both funds, which are summarized later on in the presentation, led to a net $162,000 increase. We did update a minor update to the funding policy this year. So you'll see that funding policy changes line item that led to a net reduction of $238,000. Essentially what we did there is, as Melissa mentioned, we pay off unfunded liability over timeframes ranging, depending on when it was established, from 13 years to 17 years. As of this year's valuation, if we kind of kept the funding policy status quo from last year without any changes, we would have been amortizing the initial unfunded liability that really represents all the unfunded liability up until 2 years ago. We would have been amortizing that over a 16-year period this year, but we built on one additional year on that amortization to provide a little bit of funding relief for the city for this year. And it's certainly still very much within recommended funding policy parameters, and as you saw on the first page, well ahead of statutory minimum funding policy. So that was that reduction. Both funds had a really great year of investment performance. You can see a net reduction due to asset returns of about $228,000 across both funds. And just one side comment, when we talk about asset returns and the impact on recommended contribution, we don't do everything on a market value basis. We actually use an asset smoothing. So what that means is that each year, if the fund's performance exceeds expectation, we recognize that over a 5-year period. So this year both funds had really nice investment performance. We've recognized 1/5 of it this year, and we'll continue to recognize over the next 4 years. So the city will still see the benefit of this year's good investment performance continuing to occur over the next couple years here. And finally, this last one, also reflective of the city doing their part to make recommended contributions. You see contributions greater than expected across both funds led to a net reduction of about $15,100 on the recommended contribution. So all said and done, that bottom right corner, that would tie back to the prior page where we talk about the net reduction this year compared to last year of about $22,600 on the contribution. If you turn to that next slide on page 4, we just show you a breakdown on this page of the two components that make up the recommended contribution. The first of which is called the employer normal cost. So a good way to think about the employer normal cost is essentially it's the cost of active members accruing benefits. So an active duty firefighter or police officer works for another year. They attain an additional year of service. They're entitled to those pension benefits at retirement. So the idea is to fund for those now so that with investment growth over time, we have really allocated the dollars that we need to pay those future expected benefit payments. You'll notice that for both fire and police, the normal cost is about 20% of the total recommended contribution. The other piece there, approximately 80% for both of the funds, is the payment towards the unfunded liability. For the fire pension fund, this year's payment towards unfunded liability is just over $3.5 million. For the police fund, it's just over $2.9 million. One thing with funding policy that's important to keep an eye on is that you don't want to have a funding policy where your payment towards unfunded liability is less than the interest growth on that unfunded liability. We'd call that a negative amortization. Basically, that would be a situation where you make hypothetically, you would make the $3.5 million payment towards unfunded liability, yet we would still expect it to grow next year. Just to be clear, the city is not in that position. This year with the fire pension fund, this year's payment towards unfunded liability, so that $3.5 million, is about $630,000 greater than interest growth on unfunded liability. So that means we're really chipping away at that unfunded liability. On the police side, it's about $520,000 greater. So really this year, the city is putting in about $1.25 million greater than the interest growth on unfunded liability, which is going to lead to that increasing funded percentage over time. I'll go quickly through these next couple pages on 5 and 6 because I don't want to get too much in the weeds here. This will summarize all the demographic changes for both the fire and police pension fund. Every year there's always going to be demographic changes that are going to impact our valuation. For this year on the fire fund, there was a couple new hires, a retirement, and some mortality experience as listed there. On page 6, same thing, but for the police pension fund, so we saw a couple new hires, one retirement, one disability, a termination, and some of that mortality experience as well as listed in that second to last bullet. If we move along to page 7, this will detail that funding policy change I mentioned before. Just to make sure everyone understands that, essentially we're taking that initial unfunded liability. That's a really big portion of the total unfunded liability. It's about 83% of it. And we've extended out the amortization period for that just by 1 year. So essentially, instead of going from 17 years to 16-year payment this year, we just maintained that 17-year amortization period or payoff period. On page 8, you can see a breakdown of the change in the market value of assets for both of the pension funds. Again, I won't dwell too much on this because it all is in the audit in the financial statements. But one thing to highlight on this page, if you look in that text box to the right, the rate of return during the fiscal year for the fire pension fund came in at 14.08%, and for the police pension fund, just over 11%. When we calculate those returns, that's net of all administrative expenses, not just investment related. That includes all the administrative expense. So that's a really stellar year. Both funds, we expected the rate of return to be about 7%. So whenever there's a year with investment performance that exceeds expectation, you're going to see that help to mitigate the recommended contribution. And so we saw that this year. On page 9, we go over some of the demographic information for both of the pension funds. Not too much exciting on this page. You can kind of see benefit payments over the last fiscal year came in. The city paid about $8,264,000 in benefit payments, or I should say the pension funds paid that. If we fast forward 10 years from now, we would expect between both of the pension funds to be paying out annual benefit payments of about $12.77 million. That represents about a 54% increase in benefit payments. And while that number might be kind of shocking, it's actually relatively modest in terms of most of the funds we work with. And also keep in mind, when we develop the recommended contributions, we're taking into account the fact that we expect these benefit payments to increase in the future. So to the extent the city can fund those recommended levels, it's positioning both of the pension funds well to be able to pay higher benefit payments in the future. On page 10, we get into some of the risk management comments from our report. So you'll see we've got it separated between the fire fund and the police pension fund. The first bullet point we look at is we look at the total market value of assets within each of the pension funds, and we compare that against the liability that's associated with the inactive members. Really what we're trying to do with that is to see that as of fiscal year end, is there enough money already set aside for all the inactive members? For both funds, we do notice that there is a shortfall. That's not necessarily alarm bells ringing or anything like that. But what that means is that in terms of the cash coming into the fund, we would expect some of the cash coming into the fund in the short term to be used for benefit payments in the short term. You can kind of see that reflected, and just to bring that point home on the second bullet point, we take a look at the ratio of benefit payments to the market value for both of the funds every year. For the fire pension fund, that ratio comes out at 8.56%. Really, that just tells us the fire pension fund is paying out about 8.5% of the total fund value goes out the door in benefit payments annually. So if we're to stack that up against the expected rate of return of 7%, if the fund's expected to pay 8.5, earn 7, investment earnings alone are not expected to be enough to pay benefit payments. So what that means is there's some other cash coming into the fund, member contributions as well as the city's contributions. Some of that money, in an ideal world, we'd like it to sit in the pension fund trust for 30 years accruing interest. Because the fund is paying out relatively high levels of benefit payments, some of that money will be used in the short term to pay benefit payments. And you can see that the number, actually, just for reference, of last year, it's gone down quite a bit. On the fire pension fund last year, that ratio was 9.55%. Now it's 8.56%. So that's really, it's a combination of a couple things. It's a combination of the funds moving in the right direction, as well as those really nice investment returns this year. We'll continue to monitor this over time, but if recommended contributions come in as they have been, we'd expect to see a declining ratio here, which is the way you want it to go. And that last bullet point for each of the funds, we just give a sensitivity figure, mainly just for the board's information so you can see how volatile this assumption is in the determination of the recommended contribution. The expected rate of return for both funds is 7%. If we were to claw that back and reduce that expectation, really what that means is if we were to expect less money to be coming in the future from investment earnings, then it's going to cost more from some other source. Member contributions are fixed, so it would increase the city's contribution. So you can see here for the fire pension fund, if we just took that 7% rate of return and reduced it to 6.75%, we'd be looking at about an 8% increase, or about $340,000 increase to the recommended contribution. And similarly on the police pension fund, it'd be about a 9.72% increase, or about a $350,000 increase to that pension fund. And that's just for a 0.25% change. So important to keep that in mind as we think about what's the right assumption there for the future, especially once the pension funds are consolidated. On page 11, we give a breakdown of our calculation of the statutory minimum, and that's the last slide I want to go over with everyone today. This is calculated according to the state's funding policy parameters. So the state's funding policy parameters is to target 90% funding by the year 2040, and you value liabilities a little bit differently using projected unit credit liability. So you'll notice, as I mentioned at the beginning of my presentation, the statutory minimum comes in about $5.7 million. Our recommended is, again, about $7.9 million. So that's about a $2.2 million discrepancy. And really that's reflective of the fact that the city is, definitely has a recommended contribution that is far exceeds what statutory minimum levels are at. With that, that's the results of the actuarial report for this year for both the fire and police pension fund. And I'd be happy to answer any questions if anybody has any.
Thank you. Any questions from council? Alderman Sonoyka?
Thank you, Mayor Pro Tem. So, Mr. Kavanaugh, can you provide any recommendations to this council and city staff about what kind of changes that we can be expecting from Springfield with regards to the numbers that we've gone over tonight?
Yeah, definitely a good question. So to kind of back up a step for those who may or may not know, the pension consolidation legislation that got passed earlier this year, essentially what this is telling us is that The assets from both the fire and police pension funds, which are currently held locally by the pension funds, are going to be consolidated into, for the entire state of Illinois, are going to be consolidated into just 2 pension funds. There'll be 1 fire pension fund for the entire state of Illinois with all the pooled assets together, and 1 police pension fund for the state. There will still be there'll still be the pension board, there will still be the development of the recommended contribution, but that will lead to some changes. And probably the most notable change is that once the pension funds are consolidated, the investment allocation for both of the funds will change. So at that point in time, it will definitely require a review of the actuarial assumptions and the investment allocations to make sure that the assumptions make sense at that time. We've kind of heard, it sounds like the guidance from what we're hearing is that it sounds like the consolidated fund, which will produce an actuarial valuation similar to the way the Illinois Department of Insurance does it this year. It's according to statutory minimum funding policy parameters. We'll be using a 6.75% expected rate of return on investments. So if you recall from my presentation there, when I went through the risk management comments, and I said how you would be looking at an increase to the contribution if you lower the expected rate of return, that's definitely something that I would kind of have in the back of your mind as it's on the horizon. Once we actually can see the investment allocation of the fund, we'll have a better sense of what the right figure to use is. But it's not unlikely that we could see a shift from the current 7% rate down to a 6.75% rate. And across both funds, that would cause almost a $700,000 increase to the recommended contribution. So I think that that's probably the biggest thing right now. The other kind of pending items that are rolling around in Springfield is, you heard me mention statutory minimum funding policy parameters is to target 90% by the year 2040. Last year, there was some proposed legislation about extending that out to the year 2050. Extending that out would, if the city contributed the minimum, would provide funding relief, but it's not necessarily a recommendation from us as your actuary, because based on the current funding policy, you're really moving in the right direction. So that's something we could see come. It sounds like the last piece of legislation kind of died in committee, but it could be reintroduced at another session coming in the future. Something to be aware of.
Thank you, Mr. Kavanaugh. And do we know how will other communities' contributions affect our contributions or all of the progress that we've made thus far in the anticipated consolidation?
Yeah, good question. So the way that we're understanding it is that it's really, think of each pension fund as an independent piece of this larger consolidated fund. So there should be no intermingling of assets amongst any of the pension funds. That's the way that it's structured, and that's the way that it's written into legislation. So it shouldn't, at this point in time, based on the way that it's structured, the decisions and the funding policy and the funded status of these pension funds for the city of Rolling Meadows will really be unaffected by the consolidation move.
So then to clarify, we also have residents who are watching this as well. Can you clarify what aspect is being consolidated if the funds themselves remain independent?
Right. So it's really a consolidation for investment purposes only. So say, for example, if there's a police officer who may or may not be entitled to a duty disability pension, that would still be adjudicated, and there would be a local hearing with this pension board within the city of Rolling Meadows. Similarly, basically everything else will remain the same for now. There could be changes in the future to different components to this puzzle, but for right now, really the only difference is that whereas before the pension fund, every single pension board, for example, the fire pension board and the police pension board, each hired their own investment advisor to give them guidance on the investment of the assets and to produce, hopefully the best returns possible. Now that will all shift to being the responsibility of the consolidated pension fund. And there's a board that will be responsible for overseeing that and hiring their own investment advisors and all that within the consolidated boards.
Thank you, Mr. Kavanaugh.
Thank you. Any other council members? Alderman Bud Matz?
Thank you. So, Mr. Kavanaugh, just a quick question. So that means that our investment results will be the same as every other municipalities?
Essentially, yes, with a very minor exception. Really the way it will work is that you'll get a piece of the pie, right? So if the consolidated fund returns 7%, you'll get 7% on your invested assets. The only reason it could be different from one fund to another is that some funds have to hold a lot of money in cash to be able to pay benefit payments if they have really high benefit payment levels. So they could potentially miss out on some of that investment opportunity. So you might see a slight variation from fund to fund, but for the most part, you're going to see essentially a uniform investment return for every fire fund, and then separately for every police pension fund.
And then the returns that we had were net of investment. So could we expect that the investment expenses are going to increase or decrease under the new system?
Yeah, fundamentally, the way that the system's designed, they should decrease, because that's the idea, is that, instead of each pension fund having to hire and these investment advisors preparing reports, driving to meetings, all these things, all those costs, kind of with just an economy of scale. Now it's such a large pension fund, multi-billion-dollar pension fund. Theoretically, hopefully, that those investment expenses will lower. I don't know the actual contracts right now, but it should be less.
Thank you very much.
Mm-hmm.
Thank you, Alderman Von Metz. Any other questions? I had a question.
Yeah.
I see staff waving back there, but I do have a question. So if we're anticipating that the rate that we're going to get back is lower than what we're currently getting, is there a way that we can be proactive about that? And when would we see that come about? Is that 2023? When would we see that?
Right, good question. So right now, the timeline for consolidation, and Jamie, please correct me if I've got anything wrong here, is about June 30 of 2022 is technically the deadline that all the pension funds are supposed to be consolidated. On the fire side, they're moving a little bit faster than on the police side, and so it seems like that's going to be pretty feasible on the fire side. On the police side, it could be right down to the wire that could happen. Yeah, it will be down to the wire, we'll say. And so, that would be a change that really essentially once we're able to look at and say, okay, this is how it's invested, this is the policy, this is the statement, we can do an analysis to say, based on that, this is the expected rate of return that we'd expect to see. And then on top of that, getting the guidance from the actuary that was hired by the Fire Consolidated Pension Board, knowing that they're probably going to use 6.75%. To the extent that there's flexibility within the budget, getting those dollars into the pension fund now is always going to be a benefit. You talk about saving taxpayers money. Really, when we look at the unfunded liabilities within these pension funds, they grow every year with interest at 7%. So anything you can do to eliminate that unfunded liability, and instead of having a liability growing at 7%, instead having investments allocated and earning 7% and working for you instead of against you, always going to be a benefit to the city. It's just right now, it's just so hard to say, should we use 7? Should we use 6.75? Should it be 6.5? Without having the full information available to us. So I would say, it'll probably be, it could be a year from now, could be 2 years from now, that we'll probably see a shift in that assumption.
Yeah, and just one comment on that to clarify. That's really just the assumed rate of return that's being used to develop your contribution. But remember, one of the goals of consolidation was hopefully seeing better investment returns because we're pooling that investment. So, yes, I'm sorry. So conversely, you would hope that the actual results are better than what the assumption is that's being used to generate that contribution.
Okay.
So,
Thank you.
yes.
Alderman O'Brien?
Great. And this might be putting you guys on the spot, but from a national perspective, is Illinois leading the way in this? I have to guess not, that we're the 49th state to do a consolidated pension program, but I could just see that being a question of are we treading on new territory or we're one of the last to get in?
No, I would say we're towards the end of that spectrum.
That's fair.
So if you look at some of our neighbors like Michigan, for example, that's a statewide plan. And we have a statewide plan here that the city participates in, and it's IMRF. And that was, IMRF, I will tell you, is a poster child across the country because it is a well-run plan. Most, municipalities are sitting at about 100% funded in that plan as of today. So there were some pieces that the state kind of drew from that platform that helped develop the concept of these consolidated boards.
Thank you.
So,
Any other questions from council? Then I'll direct to Director Gallagher.
Thank you, Mayor Pro Tem. And two items. So first off, I know that, based on what our actuary is letting us know too about pension consolidation, it's important to remember that there will be discussions with City Council in both pension funds about relooking at our funding policy. And with that being said, Kevin, I have a couple questions for you. One is, first off, our funding policy as it sits right now, are we making some progress? Are we heading in the right direction? The second question is something that Alderman Sonoyka and City Manager Krumstock and I were discussing recently, is what are some of the stabilization items that we could do in the future to start continuing down that path to work towards bringing down the unfunded liability even further?
Absolutely. So to answer the first question, and now it's on Jamie's level. To answer your first question, I think that when you compare the city of Rolling Meadows against other municipalities and how the city has funded the pension funds, the amortization period that we're using to pay off unfunded liability, you're definitely on the right side of that. Hard for me to say exactly, are you in the top 10%, maybe something like that. It's a pretty aggressive funding policy. Right now, essentially, if you were to just, I talk about how there's different payment periods for different sources of unfunded liability. If you were to just look at it and just say, hey, well, if we were to just, kind of give me a simple number so I can compare against the state's policy. So the state would be targeting 90% in 20 years. Effectively, with the fire fund and the police fund, we're targeting 100% funding in about 16.2 years. So you're talking about a 3.8-year acceleration and also targeting 10% more funded percentage in the long run. So to your first point, certainly I think the city of Rolling Meadows is doing their part to make those contributions to help keep the fund in a growth position. And you're starting to see that in this year's results where you see a nice increase in funded percentage, and we hope to see that trend continue. To answer your second question about what if you wanted to, be even more aggressive, how can we eliminate unfunded liability and make it so that, as I mentioned before, we don't have this growing unfunded liability. So I think that there's really a couple things you could look at with that. One thing you can look at is funding policy changes, as you mentioned, Melissa. So with funding policy changes, I talk about we're targeting 100% funded in about 16.3 years right now. So I did take a quick look and ran some figures and said, hey, what if instead we used a funding policy that said, hey, let's be 100% funded 10 years from now? So essentially accelerating another 6 years on that payment towards unfunded liability. So just to give the board a sense of what that would look like, if we were to just essentially target 100% funding 10 years from now, instead of the recommended contributions I went over here today, we would be looking at about a $5.9 million contribution to the fire fund, about a $5 million contribution to the police fund, for a combined $10.9 million contribution this year. If we even took one step further and we went to a 5-year amortization period, so if we target 100% funding in 5 years, again, it's going to be a really substantial increase. For the fire pension fund, you'd be looking at about a $10.2 million contribution. On the police fund, about 8.6. So just to recap those figures, if we were to do 100% in 10 years across both funds, you're looking at about a $10.9 million recommended contribution. If we did a 5-year target, then that would be about an $18.8 million contribution. So obviously massive. But I will say, when we look at funding policies like that, there's advantages and there's disadvantages. So one of the advantages in having a policy like this is that you will, in a very short amount of time, eliminate the unfunded liability that exists and not allow it to grow with interest. In the long run, that saves taxpayers money because then they're not having to pay that interest cost every single year. On the flip side of the equation, by using a policy like this, it creates volatility. Volatility happens because if we use a 5-year amortization period, for example, that means that next year we're going to use 4, the year after that 3, 2, 1, until we hit 0, and then the fund is 100% funded. when you have a policy like that, it means that any new sources of unfunded liability are paid off over that same time period. So if you just run a hypothetical scenario and say, hey, what if the pension funds had a $10 million investment loss in the year before the last year? Well, then you'd have 1 year to pay it off, so you'd be paying dollar for dollar the investment loss. So that's a huge risk. To talk about, potentially a $10 million swing on contribution in 1 year, probably not very palatable for the city council. So that's a risk associated with using a policy like that. The other thing to keep in mind when I talk about these figures, similarly with these figures, the same way I talked about the recommended contribution when I went over originally, we expect the contribution to increase about 3 to 4% per year. So even if we implemented a policy like that, we would still be expecting that. So at these higher contribution levels, we'd be expecting them to increase annually up until the point that amortization period ends. You'd see a really, really sharp decline. So what would happen is we're saying, hey, we've got to be 100% funded in 5 years. So then 5 years from now, we hit the 100% funding mark. And then next year, the payment towards unfunded liability could be next to zero. So then instead of talking about the full recommended contribution to each pension fund, you could really just kind of view it as essentially the city would just have to be paying normal cost. So that, the way that would look this year, and of course it would be different if it was 5 years from now slightly, but the image that would look this year is that instead of the combined $7.8 million recommended contribution this year, it'd be about 1.4 if you were just paying normal cost. And it would work similarly under any funding policy parameter that would target that 100% funding. Once you hit it, the payment towards unfunded liability will become very small because it'll just be the year-over-year changes that occur. So that was a lot of information to answer your question, Melissa, but hopefully that hit on some of the key points for the City Council's information, just to kind of understand that process a little bit more.
Thank you very much, Kevin.
Mm-hmm.
Thank you. Alderman Bud Matts.
Okay, so this is just a little crazy idea, but
Yeah.
you can kick me if I'm dead wrong, but is there any sense with interest rates being so low as to actually taking out a bond to get 100% funded and reducing our overall net interest costs?
Yeah, definitely. I think that's, amongst different municipalities, definitely a hot topic right now. You mentioned the interest rate environment being really low. There's advantages and disadvantages to a policy like that as well. The good thing is that you would get the fund, theoretically, you'd get the funds to 100% funded status, essentially overnight. The trade-off there is that when we talk about our recommended contribution to the pension fund, every single year it's a process, right? We go through this process of looking at what changed to develop a new recommended contribution. So let's just say hypothetically, the city said, hey, let's issue bonds tomorrow, both funds 100% funded, we'll be good to go, right? No more contributions to the pension fund. That's not quite how it works, unfortunately. That would be really nice. But really, if you were to get both funds 100% funded, what that means is that you'd eliminate the payment towards unfunded liability. The normal cost would be unaffected. So you're still going to have, that $1.4 million of normal cost. That's what it looks like this year. And then the other piece would go away, the other $6.5 million. So that's kind of how it would look. And then the only other thing to consider as you kind of think about that is that over time, there's always going to be things that influence. They can create unfunded liability or eliminate it. So, just important to keep in mind that really what that would mean is that in year one, let's say the city issued bonds to fully fund both pension funds, you'd be contributing essentially just normal cost, plus or minus a little bit maybe. Then the year after that, maybe we have some really good investment performance or really poor investment performance. Then that could create or eliminate unfunded liability, which could then increase or decrease the contribution. So it's important to remember that there would really be three things that the city would have to consider under that scenario: making normal cost contributions, servicing the bond payments, and then the third piece is dealing with any new sources of unfunded liability that could potentially, it could increase the contribution in the future.
But at this point, with the interest rate so low on a bond, this would be the most attractive point in time to do that?
Yeah, we've definitely seen a lot of municipalities doing it. And I think that, obviously the lower the interest rate, the better your deal's going to be. Yeah. Did you have anything to add to that, Jean?
Yeah, I think, and I was going to make this comment before, There's no magic number in the year 2040, so I think it's really important to not get too short-sighted when we talk about a pension plan, because even when, Kevin talks about an amortization period of 16 or 17 years, that pension plan is likely still going to exist in 16 or 17 years. So you have to be really careful to not get too short-term focused on a very long-term kind of concept. I think, many of the communities that have considered the bond issuance, I think, and there's a few case studies out there that I can tell you have happened in the past. One is a fire district in particular that did it many years ago, and I think if you track kind of their historical funded status, for the reasons Kevin mentioned, I would tell you their funded status probably doesn't look as attractive as what they thought it might look like at the time of that issuance, because that liability can continue to grow because of demographic changes, investment losses, et cetera. So it's really only a point in time that you're eliminating that liability.
Thank you.
Alderman Snorka?
So then as a follow-up to that, can you help us contextualize how much of that, potential risk exists? Because right now, if we're looking at approximately $8 million that we'll be levying for the pension contributions to both the police and fire pension, and our retention rates are at 1.5 million. I mean, that's essentially a water main or two, that we could be spending every year. And so would we anticipate any type of unfunded liability to be equivalent to that difference, that 6.5 million?
No, but remember, you still have the debt service payment, and that's the piece that Kevin said so it's really not a gain of.
Can you come up to the
Hey,
microphone?
Sorry,
Thank
it's
you.
not a gain of 6.5 million. It would be whatever the net differential is of paying off that debt that you've now issued. You're trading one payment for another.
Thanks for that clarification.
Any other questions? All right, thank you.
Thanks.
All right, moving on to the next agenda item. It is the police social worker update. So I believe Chief Nowacki.
Oh, we're jumping. Uh-oh. Good evening, Mayor Pro Tem, City Council members. Thank you for this
Oh,
opportunity.
did I skip one? I did.
No, we're
Oh,
good.
see?
We're good.
First night on the job.
No, thank you for this opportunity to give you a hopefully a brief update on the expansion of police social services. For those that weren't here last year, it was actually last year in September. I was at a committee of the whole meeting, and it was through the leadership and vision of the mayor, city council members at the time, to have me look at expanding social services. I took that to heart because obviously I realize the value of our police social workers and the phenomenal work they do in helping victims of crime. Since that time, I was able to obtain a grant through the Department of Justice. It's through the Victims Crime Act. I have to thank our grant consultant, Todd Kupsak, for helping with that. I don't think I could have got through the first page of that grant application. But having that grant, I did hire an additional social worker at the first of the year. That social worker actually came from in-house. We had an employee here that had a master's degree in social work and had experience in that field. However, shortly after taking that position, she did leave for other opportunities. That did put me in a tight spot in that I did have funds from a grant available to fill a position, which I no longer had a person. But in life, sometimes you're given lemons and you need to make lemonade, and we were very, very fortunate to find Kimberly here, which I'll have her tell you a little bit about herself just shortly. But Kimberly was no stranger to Rolling Meadows, and she'll expand upon that in a couple of minutes. But since she started here, we've already achieved a lot of things. One of the things we did is we increased interaction between our patrol force and our police social workers. There's a lot more interaction, a lot more communication about discussing strategies to help victims and so forth. And how partially we achieved that is that we actually moved Kimberly downstairs to patrol. So she is actually right in between the patrol officer's briefing room, their work room, and also our patrol supervisor room. So she has a lot more interaction with that. With her being here, we also were able to increase our coverage and availability of when we have a police social worker. Perfect example of that is currently Dr. Nieves is out on extended leave. In the past, we would then forego having a police social worker. But obviously, crimes are still occurring. We still have victims. But with Kimberly here now, she obviously stepped up to the plate. She's been helping victims. I'm sure she could elaborate on in a couple of minutes. So we were able to maintain that high level of service. Like I said, some agencies, if you watch the news, they're talking about possibly adding or having a social worker with the department. We not only have that, like I said, we have two highly trained, skilled professionals helping victims at some of their darkest times. So we're very fortunate to have such a high level of service we could provide. In addition to some of the benefits or achievements we've already obtained, we've given Kimberly a police radio so she can monitor ongoing calls. And if she hears any call that she could offer assistance or help, and able to respond in a more timely fashion now. So I think that's been a huge improvement. I do have a lot of other goals I'd like to achieve in hopefully the near future. One of those has to do with having Kimberly and Dr. Nieves develop like a crisis fund. I know I've had discussions with Alderman Budmatz and Alderman Sonoyka about that. This came to light, it was last year during the fire we had. I think it was over a dozen families displaced. The city's social service fund, quickly ran out, if I'm correct on that. And we do have funds from Salvation Army, just so it couldn't sustain the magnitude of help that these Rolling Meadows residents needed. So I'm hoping in the near future that Kimberly and Natalia could, like I said, develop a crisis fund, hopefully funded through grants, donations at a zero, taxpayer involvement. So hopefully we could present something in the near future in that area. I'd also like to, I think I briefly mentioned before about maybe expanding by adding a crime prevention officer with the police social workers to work on more long-term solutions, to be more proactive, have an officer that's highly trained in crisis intervention, domestic violence, crimes against the elderly, and have more of a team that is looking, like I said, at long-term goals, like more proactive instead of reactive. So I think the future is extremely bright for this agency. I think we're leaders in the field of providing services to victims of crime. So I do want to thank the mayor and the council for letting us expand that, because like I said, it's been very valuable. And at this time, I'm going to introduce Kimberly. She could tell you a little bit about herself. So Kimberly, it's all yours.
Perfect. I'm going to go up there. Do you guys mind if I remove my mask? Oh, please breathe. Good evening, everyone. Thank you for having me tonight. Like the chief said, my name is Kimberly. A little background about myself. I am a Rolling Meadows High School graduate. I graduated in 2012. I then went to Harper, where I got my associates in arts in 2016. I then went to Northeastern Illinois, where I got my bachelor's in social work in 2018. And then in 2018, I went to Dominican University, where I got my master's in social work. I finished my master's in a year versus 2 years because of my good grades and being on the dean's list. I'm currently working on getting licensed so I can have my LSW soon, hopefully. I interned here, like the chief said, back in 2016. I also ran the summer camp program because Natalia did have her first baby, and now she had her second one, so she's keeping a trend here, but good for her. And so basically what Natalia and I do here is we do the same thing. We have the same title, so services offered by the social services specialist. So we have the same title. We do crisis intervention, we do court advocacy, we do community education, crime prevention.
We do domestic violence, we have an emergency assistance program, we have referrals to supportive services, and we offer short-term counseling as well. Like the chief mentioned a little bit, what makes me a little bit different than Natalia is that I am downstairs with patrol, so I do attend roll call. I do have that one-on-one interaction with an officer. If I ever have a client in my office, I do have the officer that's in charge of the case, so we're able to better communicate with one another. I go to active calls. I'm still waiting on my bulletproof vest to get here, hopefully in a couple weeks. But the calls that we do get, they're kind of civil. I don't mind going. I have helped translate multiple times with officers and survivors of crime. I actually just helped maybe an hour ago. So they do use me a lot with that. And again, just, doing the active calls, which I think it's amazing. I was at Wheeling Police Department before coming here, so I did see that interacting with the survivor when the incident happens, it's better than sometimes it happens at 2 a.m. and the officer has to tell them, well, she's not in until late in the morning. She'll give you a call. So I think just being there when the crime is happening, it's better for myself, the social worker, and also the survivor of crime. What I've done a lot is court advocacy. So since Natalia has been gone, I believe May 14th, I've done over 15 orders of protection since they've all been granted. Not only is it order of protections, but I also go to the Rolling Meadows Courthouse and I offer that court advocacy part. So if they need hand holding, if they need advice, if they don't know what to do after the order of protection has been served, it's just explaining, okay, listen, it's been served for 3 weeks, Then if you want to extend it for up to 2 years, you have to come back. Now with everything because of the pandemic, obviously everything's via Zoom, so it is a little bit easier for the client. And sometimes I do have the client come to my office and they just feel more confident doing the Zoom next to me than versus doing it alone. So I'm very excited to be here. I am very busy, which is good. That's what I was hoping, and like the chief said, hopefully we can expand this position and hopefully get another social worker. Do you guys have any questions?
Any questions from council? Welcome.
Thank you so much. I'm very
I think
excited.
we do have a question in the back row.
We do. Question in the back from staff.
It's not really a question, but it's more some additional conversation. Obviously, some of us have known Kimberly since she was this small.
Yeah.
But again, we do appreciate what she's also not mentioned is that when Natalia's back, they're sort of spacing their hours differently. So Natalia starts earlier, finishes. Kimberly's coming halfway. So there is some coverage longer for the community. And the other thing is that obviously most recently last Friday, thanks to Willow Creek and Alderman Bud Mance and his wife Teresa actually worked the food part, but Kimberly still works with the East Park Women's Group and some of the other pieces where we're always interacting. So again, there's a lot more work that you don't see, but Kimberly's always working with local groups, the court system, and obviously an advocate. She's also been very good, and obviously the chief knows this, is that interacting with having her office down there, it's better interaction with the officers because they're able to ask questions, not just of Kimberly, but also of their sergeants. Hey, can we go to Kimberly for this? But there is more feedback, trying to make that social point of there is more need sometimes, and again, having that interaction with the officers on a day-to-day actually makes that a little more tempered on some of the other pieces too.
Thank you. Manager Krumstock, anything else from council? Well, welcome, and we're
Thank
very
you.
excited to have you.
Thank you so much.
I know council was really excited to have this opportunity and get the grants. And I'm looking forward to more opportunities, like Chief said, about reaching out into the community and raising the funds for those crisis programs like we had talked about. So, and if that's it, right? Okay. And we'll go back to the original agenda
Thank
item.
you.
We needed a break from numbers. So the fiscal year 2022 budget parameters, Director Gallagher.
Thank you, Mayor Pro Tem and City Council. It was great to hear from Kimberly. Thank you so much. Thank you. We are starting tonight with our budget parameters discussion. Within the packet, we have the outline of the discussion, but we also added a PowerPoint presentation for tonight. So we're going to go through the PowerPoint presentation, and if you have questions along the way, just jump in, of course, and we can save questions to the end as well. But also remember that as we're developing the 2022 budget, we are looking not only at 1 year, but multiple years when we're looking out. We're looking at the short term, but keeping in mind the long term. In addition to that, what's really important to remember is that this is just the beginning parameters, although items have started to be worked on. The 2022 budget document is being developed, as we've mentioned, and it does meet the needs of our community and provide high-quality services to our residents and our businesses. It is a resource. We see it as a living and breathing document that not only staff can refer to, but residents and businesses, so that they can learn about city services. The city's annual budget process is in the packet, so we provided you an attachment directly from our budget book, which has the outline of how the budget process works. We have the budget planning calendar. A couple noteworthy dates as we work towards, as we sit here in June, we work towards the September date, but we have a couple items along the way. When we're sitting here in June working on budget parameters with City Council input, just to look at the calendar, it's in your packet, but August 17th, Committee of the Whole meeting, we will be presenting to the City Council the Capital Improvements Program for 2022 to 2026. In the September 14th Council packet, we release the proposed budget for 2022, and the first budget discussion takes place September 21st. Just kind of looking ahead a little bit. And also an attachment within the agenda packet for tonight is the debt service outstanding chart as well. The city's annual budget fulfills a couple of key functions for the city. It's a communication tool. It does outline our operations, our resources, our constraints, our opportunities. We have a lot of stakeholders that pay attention to our budget. Obviously, our residents, our taxpayers, city staff, outside agencies. There are many stakeholders that are involved in this process. It is a policy document. It's an accounting document that does account for, in conjunction with our fund balance policies, our expenditures and our revenues. The initial development of the budget has started kind of similar to the audit process. It is an annual process, so we do begin in January, we end in December. Your part of the process as City Council is input throughout the process and communicating, obviously being a conduit with residents and business owners. We did start the development in January. The audited fund balance obviously provides us with that pathway of seeing where we ended for 2020. Now that we have that in hand, we can move forward again with the proposed budget. We do use our ending fund balance estimates as developed in the 2021 budget as a starting point. So that's why we're able to work beginning in January. Your input from this discussion is very valuable and appreciated. As mentioned, we have two financial planning documents, our capital improvements program and our budget. Those are the two primary planning documents that the city uses. We are very proud of the fact that the city applies for each year the Distinguished Budget Award through the Government Finance Officers Association, which is a national recognized program. Similar to the audit process, there is a packet of information that you submit along with your budget. Now everything is through a secure portal. Makes it a little bit easier on us, but it's still a process. We want to make sure that we're meeting their guidelines and recommendations. It does reflect very high standards for the city. There are many municipalities that apply, and many do not apply. So we're in good company, but we consider this a very important part of what we do. So we wanted to just jump right into the funds, and I think that it's just important to remember that this is just a basic overview as we start to develop parameters for the budget. We have to start in one place to move forward. The general fund is our largest operating fund, and we're going to start there just as a basic overview. As we know in our discussion with the city's auditors, we are a little bit healthier than we initially were sitting a year ago, which is really important to remember because we were looking at a $2.9 million revenue loss. It was actually 1.1 million when you look at actual to budget. However, there are some line items that are going to take a little bit of time to recover, but I think it does help us in the fact that we have now the state of Illinois restrictions lifted with COVID-19. But we still need to recognize the fact that we have pressures from the state of Illinois for local government distributive fund revenues such as income tax, state motor fuel tax, other revenues that are threatened at the state of Illinois level. In addition, we're always thinking long-term and short-term. We need to be mindful that there are revenue updates that we look at continually. One is from the Illinois Municipal League, the Northwest Municipal Conference. We look at our trendline data, and we also discuss many items with local city managers, as City Manager Crumstock attests to. We also talk with our municipal neighbors as well. We monitor and assess and do as much stress testing to our revenues as possible and keep you informed as we move along through our monthly financial statements, which are really important to keep you updated. Our salaries, benefits, contractual, and supply line items, the majority of those in the general fund do follow the contracts that we have set by those contracts. We are looking to, wherever we can, actively reduce things like overtime, things that we have control over. There are some things that we do not when they're set by contract. Speaking about collective bargaining contracts, similar to the 2021 budget, we had a manager's hold of $400,000 for the budget because we had two contracts that we were still settling, the AFSCME contract and the Local 150. Similar to that, if fire and police contracts are not settled by the time that we develop the budget, then we would also have a manager's hold. Manager's hold not only covers those items, but other things that are included in terms of things that the City Council is planning for. In particular, now with an environmental committee up to date and active and running, and also our Economic Development Committee, there are some initiatives that those two committees are planning, and we want to be prepared and think about what types of expenditures that we want to look for goal money for those committees. The general fund, in terms of things that we have been doing and being consistent in our practice, is a repayment of $100,000 from the general fund to the Vehicle and Equipment Replacement Fund. This would be the 7th payment, which pays back $1 million transfer from the Vehicle and Equipment Replacement Fund back to the general fund. So we would continue that. We always reevaluate if that's something that can be done, but at this point, we're assessing that would be part of the budget. The general fund continues to pay down a general obligation bond that is transferred from the general fund to the debt service fund, and that is $715,000 for next year, so that would be the debt service payment. A really important reminder as we're looking at our overall debt service is the fact that the bond that's paid from the general fund is roughly about $730,000, and that debt service will be paid in full in 2023. So by 2024, this budget, the 2024 budget in the general fund, will have less expenses, about $730,000, beginning in 2024. What does that mean right now? Well, we're looking ahead, as we've mentioned, but it's just really important to note that when that expense is not available in the general fund anymore, those are the types of things that the City Council and management will look together for future capital, looking at funding future pension costs, and looking at other reserve ideas for other funds. Chargeback funding, of course, we talked about this before, where that is really important to look at the overall picture for chargebacks and seeing what we can do to incrementally change and increase those chargebacks to account for the work that's being done in other funds back to the general fund. We've mentioned before that those chargebacks are not where they should be, so they should be increased to cover the expenses. So in a nutshell, that's really the big picture to the general fund. At the end of this discussion, we do have a topic for a straw vote related to the property tax levy, and we'll go through that at the end. But that's the general fund right now overall. Feel free to stop me if I'm going too quickly. So I'm just going to move on through to the 911 fund. So the 911 fund, and of course both chiefs and city manager attend many meetings at Northwest Central Dispatch. but all parts of the emergency communication system is accounted for in this fund. It is primarily and only funded by a property tax levy of $700,000 per year. It's one of the line items in the property tax levy. It does have a fund balance policy, and it is within parameters. The caveat to that is that we have been talking about for some time working on a policy to increase fund balance because of the fact we have future capital needs to keep up with changes in communications. But we also have things such as, with the new Illinois Justice Reform Law, changes and increases to what would have body cameras coming up in 2024. So they need to be purchased by the city and installed by 2024. Right now, early estimates are anywhere from $300,000 to $500,000 annually. Again, that's a very broad-based estimate, but it's something that we need to start planning for and look at incremental changes to the tax levy possibly. Moving on to the state motor fuel tax fund and local road fund, and I know that we've got, with Director Horn in the room and also City Manager Comstock, we have a lot of work that we're doing in Capital Projects Committee with our committee members, but we're not going to go into a lot of detail because we'll go into that at the August Committee of the whole meeting as far as the structure and revenues and such. But the 2022 budget will be taking into effect the Rebuild Illinois bonds, the capital improvement program from the state of Illinois. We're receiving about $1.5 million of revenue from the state, where we've received already all the way through the couple years, about $1 million all in. And next year we'll receive the remainder of the 1.5. These are for long-term capital projects and roadway improvements, and luckily that's part of the state motor fuel tax fund. In addition, the state motor fuel tax fund has a per capita allotment of the regular state motor fuel tax and then also the additional amount as well. We are looking at all the capital improvement projects. We don't only look not just at the 5-year, but the 20-year look. And we're looking at the priorities for the annual street program to ensure that there's adequate funding year over year. Along with capital projects in the motor fuel tax fund is just road resurfacing or reconstruction, but in the local road fund accounts for many other items such as salts, streetlights, roadway maintenance, operations, resurfacing, reconstruction, bridge repairs. There are many items that are accounted for in the local roads fund. The revenue availability and reimbursement process that we've been talking about for some time now can take anywhere from 1 year to 5-6 years, sometimes from the state of Illinois. They're not timely in their repayments. When we have a project plan, it does take some time to get the reimbursement back if we are the ones who are first expensing the funds. The Capital Projects Committee, with Alderman Sonoyka and Alderman Budmetz on the committee, I know that those are the types of things we're reviewing right now, and we have more work coming up next week in our discussions. Moving on to the Utilities Fund, as part of the overall rate stabilization that we've been achieving over the last few years, started in 2020, and also with the use of the American Rescue Act funding, we are able to confidently say right now for the 2022 budget, there will be no rate increases for Utilities Fund. We're talking water, sewer, and stormwater. Capital projects do continue to go on, and through the 2022-2026 capital improvements program, as we're working on that right now, those items, we're taking a careful look for the next 5 years in the current plan, but we always look out to 20 years. In addition to that, as you recall, we had about a $4 million bond issuance for water main projects or underground utilities, so that also helped us with the rate stabilization. And looking ahead to the subsequent years a little out, the city of Chicago, where we purchase our water, we are looking at rate reductions, and as we make those plans forward, we believe that some of that rate stabilization is going to continue for this fund. It's really important. At the August 17th Committee of the Whole meeting, again, that's where we're going to present to the council the fund balance policy for the Utilities Fund. We're going to be working with our city auditors, Jamie Wilkie and her team, on formulating a fund balance policy for the Utilities Fund and working on the best practices for that. We'll also be looking at the liability insurance fund, the health insurance fund, and as I mentioned, the refuse fund as well. And as we've discussed at the April the Committee of the Whole meeting, City Manager Krumstak presented the American Rescue Act plan, which is the federal funding that we've been allocated at $2.9 million. Our recommendation continues to be to fund the long-term infrastructure for water and sewer projects. The guidance is still out there and being developed. We have not received the funding. We're just keeping tabs on everything. But for right now, that will help us with the overall rate stabilization. Moving on to the refuse fund, a couple items for that. As we've been talking about the refuse fund is at the lower range of the fund balance policy. If you recall, the fund balance policy is to maintain a balance of about 30 to 50% fund balance, and the audit does show that we're at the lower range. It does make sense when you think about we haven't had a rate increase since 2014. So there is a need for funds to be transferred into the refuse fund. It, of course, is City Council's decision to increase any rates, but at this point we're looking at transfers in. The city also, with a fund balance policy, we would be looking at increasing fund balance even further because we do have GASB, or Governmental Accounting Standard Board requirements. And so in order for us to meet those requirements as far as adequate fund balance, there needs to be additional reserves. But we will be coming back to City Council with some recommendations on that. Again, I've mentioned this a couple times, but liability insurance and health insurance funds, they are doing exactly what they should be doing in the fact that we are part of governmental pools. It really does help us, IRMA and IPBC. And we were able to transfer reserves from those funds in 2020 and 2021. Again, we're going to be bringing back a fund balance policy for review for City Council. And moving on to just overall capital projects, and the largest ones we talked about with road funding, but building and land fund and vehicle and equipment replacement fund. We, of course, last year had to take a look at reprioritizing our projects. There were some deferrals, and as we look at 2022, 2026, I know that Director Horn and his team are, and also the fire and police departments are looking at reprioritizing again, just to make sure that we're looking at all the funding opportunities. We're making sure that things are based on required needs, and we will be presenting that back to you. We do evaluate all the chargebacks again. That is for future expenditure needs. The chargebacks again are the revenues into these funds so that you have the adequate funds to pay for the expenses. As mentioned in the audit, and it was footnoted, we really didn't mention it too much, but again, the TIF number 2, which is our Kirchhoff Road TIF across the way here, that was created in 2002. It's set to expire in around 2025. That's when it's expected to become positive as far as the fund balance. It is still a negative fund, and it will remain that way until the end of its term. So for tonight, what we were looking at with City Council's input and direction, we put this in the packet as well, and I'm just adding the slide to the PowerPoint. When we're looking at the overall general fund, the general fund for 2021, we provided an estimate in the 2021 budget. And the ending fund balance estimate for 2020 came in higher than the actual came in higher than the estimate for 2020 for the audit. In the initial estimate for the 2021 budget, we came in as an estimate of $10,364,446. That was our estimate when we formulated the 2021 budget. When we received the audited funding results for 2020 in our city's audit, our gain is above our estimate was $242,228. Our thought process as we were discussing and starting to work towards funding parameters for the budget is our proposal is, now that we have the city's audit completed and our unassigned fund balance was higher than the estimate, we are recommending to make a transfer of $242,000. One would be to transfer $142,228 to the refuse fund in 2021, and the remainder, the $100,000, would be transferred to the local roads fund. and that would be to increase reserves in both of those funds. What we're looking for is staff's or City Council's direction and input tonight with a straw vote to provide staff direction to proceed with a budget amendment to go ahead and transfer those funds so that we can increase fund balance for the refuse fund in 2021 and then also increase funding for the local roads fund. Remember, if you looked at the fund balance, which, there was a lot of information in the audited fund balance sheet, but the local roads fund ended the year at $115,000 rounding for fund balance. The city's local road fund needs a lot more influx of revenues in order for us to have reserves, and we should be working towards that. And our recommendation tonight in looking for a straw vote is to proceed with a budget amendment.
Thank you, Director Gallagher. Alderman Bessetti?
Yes, a couple of quick questions. In your recommendation here for your proposal, is that factoring in the possibility that we may go down the road of the garbage cans and the retrofitting of the trucks? Would that affect the refuse fund, or would that be more other funds that money would probably be coming out of?
That's a
Should
great
we approve
question.
that?
That's a great question. It's two parts. So the refuse fund would account for the toters. And so any influx into that would build up the reserves for future expenses such as toters. But in addition to that, we would like to build the fund balance overall because we're at the lower end of the fund balance policy.
And also give you a little perspective, when we talk about the 30% to 50% for that fund balance policy, that's why we're going to have another discussion with the City Council. That 30%, then if you actually do the counting that we do, if you do the OPEB, if you do some of the other liabilities, it's actually below 30%. So putting this extra $140,000 brings it up slightly, but we always have to look at those kind of pieces. From the audit, when you look at the audited numbers in the refuse fund, where it's sitting at that 30%, there's another liability that we look at, which is about $300,000. So even making this transfer doesn't bring it back up, but that's part of that discussion. So it's like you just got a teaser of the refuse discussion that we're having.
We'll get into that a little bit more, and then everyone knows my pet desire in that
But
fund.
that's where, again, when we put in for this straw vote, we're looking at where we thought we were going to end up. We actually were a little bit positive and a little bit better. A lot of that deals with internet sales and some of the other pieces once video gaming pack online, but also we had recreational marijuana that actually did better than what a projection is when you really don't have a history to do that too. So that 242,000 total, that's what we're talking about right now. So it puts it back to where we thought with the budget, where we're going to start in 2021. And then we were looking as staff, what are the easiest ways that do need an influx of money? That 242 is sitting there and it's in the general fund. The general fund can use it for other things. We believe as staff, and that's why we're asking for the straw vote, for the two funds that are really in need at this point in time are the refuse and the local roads. Having $115,000 in our local roads program, when you are doing over $3 million roughly, that's nominal, nothing. That's why we're trying to build that up in a way that has justification. Obviously, the auditors know that we're trying to help those two funds, but at the same point in time, how do you do it logically? How do you do it development-wise? But also, it's only small bits. We even talked about, if you talk about that $300,000 in the refuse, if that liability is out there, do you just do the whole $242,000? No, we need to do this incremental for two funds that really need some support.
And then I'm going to follow up with a question on the other fund. With the, dramatic increases in the costs of pretty much everything, I'm assuming petroleum is going to be in that same boat. What does that do to our roads fund? Are we anticipating that this would be enough for the roads fund?
No, it won't be enough to address your question.
I'm assuming with the price of petroleum, almost everything you use on roads is petroleum based, I would think. So I'm concerned that meaning you may still run short.
The local roads typically does run short, so when you have about a $3 million expenditure and you're only making about 2 something in revenue, so it's always looking for money.
Okay.
That's also, again, when we have that discussion of what's actually on the property tax rolls, you do have, police protection, fire protection, police pension, fire pension, IMRF pension. You have 911 and you have local roads with debt. So we've always had a local roads amount, but that's where typically if you just want to take that snap of what are road projects, that $1 to $1.5 million, but we're not in that revenue that it's neutral at this
Well,
point.
every little bit will help, so I'm in support of this.
Alderman Snoyka?
Thank you. So given that staff has just come off of our audit and talked with our auditor and actuary, and this is related to funding balances, I'm going to be voting in favor of the staff recommendation tonight.
Thank you. Any other aldermen? No? All right. Go ahead.
And we can circle back, Mayor Pro Tem, if you'd like to do a straw vote later, or
Sure.
now if you'd like. Either way.
Let's just do it now.
Okay.
All right. So do we need to break these up or can we do these together?
How about you first start with the first vote, because if it has enough for the straw vote for the staff recommendation, then you don't have to segregate it too much.
Okay. This makes sense. All right. So all of those in favor of staff's recommendation for the reallocation of the $242,228? That's 7 in favor, none opposed? Then we don't have to break it up. I like that idea. All right. So Director Gallagher?
Thank you, Mayor Pro Tem, and City Council will continue out on the last couple slides here. The property tax increase scenarios, which is on the next slide here and in your packet as well. This is just a slide for informational. It always is asked, and I think it's important to see if you increase a percent or by dollar, what is that over in the overall? Our current levy, when we exclude debt service, is $14.7 million. And the following chart will show you that breakdown. Remember that we levy by dollars and not percentages. What's highlighted there, and it's really kind of a light highlight, is what I'll address in the second slide. The property tax proposal, and again, this is just a starting point. We know that within our line items for the property tax levy, we have a lot of competing interests. We know that the pension funds are the largest share. We have police and fire protection, we have 911, the local road fund, public works, we have debt. So there's a lot of competing items. What we're looking at for the 2022 budget is to cover future expenses for pensions, fire, and police, and to make sure that we're accounting for some incremental change, a little bit above what the actuarial was recommending. And for the police pension fund, we were looking at an increase of $26,000. For the fire pension fund, we were looking at an increase of $125,000. To start the accumulation of funding for police body cameras, we're looking at an increase of $75,000 to the 911 fund. Again, thinking about the long term. And then for the local road fund, again, incremental change to increase by $75,000 for local roads. There have been past discussions on the city council level about increasing the property tax levy. Last year, there was no increase, so there was a 0% or $0. This year, we're proposing at this point in time, with council's input and direction, just as a proposal process as we start to build, is a levy increase of $301,000 or 2% increase year over year. So to give you a little perspective, if you have an average home of $7,000 as your annual property tax bill, all in is your total tax bill, it'd be about a $25 increase to a homeowner who has a $7,000 property tax bill. We didn't provide the entire scenario here because usually we'll break it down by individual amounts, but we wanted to give you just a little bit of perspective. What we were looking at was just a straw poll, just to start plugging in numbers that we can start generating scenarios for City Council, and this would be just a starting point to move ahead and see if there's direction from City Council, at least to start with an initial proposal of increasing by this amount of $301,000 or 2% based on those line items.
Thank you, Director Gallagher. Any questions from council? Alderman Sonoyka?
So, I believe from IDES, do we know what our unemployment rate is for the city of Rolling Meadows at this time?
I believe the financial was about 7.8% from IDS. Remember, that's the entire statistical area. I would like to extrapolate, probably it's a little bit lower based on the fact that our income tax receipts actually exceeded our budget amount. But that doesn't necessarily mean that we obviously have unemployment here in the city, but hopefully that addresses your question.
It does. Thank you, Director Gallagher. And the reason I bring that up is because I would want to know, or I would want to be able to come to my residents and say to them, if we're going to increase the property tax levy, that we have to because we can't get rid of X, Y, Z. Versus, okay, well, if we want to not increase the tax, here's what we have to what we'll have to sacrifice. So if that's a specific road project, or if that's a specific position, or if there's any other items from the different departments, because I understand every department head is deciding what needs to go on the chopping block. And if some of those items are, more visible than others, then if we need that increase, that's something that I can give that's much more tangible to the residents to determine if that's something that they would be willing or more understanding than just the general concept of having to pay more this year, which we understand it can. When it comes to things like our pension obligations, that's the reality. But for some of these other items, they will definitely want more details. So with that, unless we have those details tonight, I will not be voting in favor of the increase at this time.
Thank you, Alderman Sonoyka. Any other council members? Alderman Bessetti?
Yes. Are you basically just looking for a starting point as far as a tax levy?
Correct. Yes, Alderman Bessetti, and just to start the proposal process to generate funding scenarios for the proposed budget, yes.
And coming up with this 2%, I know there is a very long laundry list of positions that different departments would love to hire. Everything from, maybe something in public works. I know several of us on the council may want to put more into social workers, even assistant city manager. Is this include enough money to be able to try and do what we truly need as far as some of the positions that are not there, or would we would we have to go up substantially to do that stuff?
So good question, Alderman Bessetti. The input for tonight, and again, this is not an increase to the tax levy. This is just looking at the property tax levy and start to think about funding scenarios for the property tax levy. The two items that affect the general fund are the pensions. So the $26,000 and $125,000 is just for pension costs to make sure we have funding in there for that. The other pieces on the line items are for local roads and 911 fund. So in terms of your question as far as future staffing, it does not include revenue for future staffing requests. Those are things that we would be looking at, and other things such as chargeback increases and other items. So this is just strictly for pensions, local road, and planning for the future for 911 for police body cameras.
Thank you.
Thank you. Alderman O'Brien?
Thank you. And this is not to put Director Horn on the spot, but this is probably for Director Gallagher. Just confirmation. The police body cams and the pensions, those are state laws. We're locked in. We have to do that. Is that correct? It just depends on how proactive we want to be for the officers, so we're not dropping $500K the year before.
Yeah, that's
where Director Horns, as much as everybody wants the roads nicely done, that's not a state requirement, or am I missing the boat on that?
So when the state of Illinois passed the Reform Act, it is unfunded mandate, but depending on your size of your municipality, when it actually comes in. So that 500 that we talk about at this point is an estimate of you're buying all your cameras. The biggest point that comes out here is that for the city of Rolling Meadows, we could be doing 100,000, we could do 250,000 annually for the retention of those cameras, and then how you change it. So that 300 to 500 is what's being used for people to actually allocate, because we don't know how much we need to keep. There's the retention laws we're going to have to keep it somewhere, and if for a very long time it's accessible. But because the size of the city of Rolling Meadows, we have a few years that we're able to get ready for that, but also position ourselves. And the good thing about it is that we do have one of the vendors that is doing a lot of the bodyguard we actually use for our current squad cards. Watch Guard is their name, but we evaluate everybody. So we're looking long-term to accumulate that money. But again, we have not purchased anything. We have not done our due diligence. That's the number that we're being told, between that 300 and 500 that you really need to do with everything. And then you have your annual fees that will be there no matter what because of the retention.
Great, thank you.
Thank you. So I have a couple. Is everyone done? Okay.
You're allowed.
I know. Keep forgetting that. Okay. So as Alderman hat now. So I am in support of the increase for the body cams. We know we have to do that, and the increase for the road funds. My hesitation for the pensions, we've just been told, we just sat here and listened for an hour and a half telling us that we're in a good position right now. And so I have a hard time telling residents that we're going to increase taxes when the accountants are saying that we're in a pretty good position this year when we have so many residents out of work and in a very financial hardship themselves. So I just feel that it's not the proper year to increase that spending this year, just coming out of COVID for the pension funds. We know we have to do the other two, but I'm not in favor of doing a tax increase. I would like to find those funds elsewhere. So I know that's kind of two-parted to what you were asking, but that's kind of where I stand on it, and that's, I think, how we'll have to do the straw votes to separate it all. But Alderman Sonoyka, you had your hand up.
Thank you. So I wanted to continue on Alderman O'Brien's statement that if this is a state law, then that means every municipality will also have to fund body cams. And as a result, I would anticipate that the city would also be looking into municipal agreements like we do with some of our other requirements or other materials, and perhaps we can actually have a significant discount in gaining a contract for the entire area. Therefore, this 300,000, 500,000 mandate for our city alone is a number. Like you said, it's a preliminary estimate, but I don't anticipate that being the final estimate for us, and I know that our staff is very creative and resourceful in identifying ways where we could potentially slash that in half.
And we are looking for grants. We have our grant consultant working on it. We're even through one of our pools, our risk management liability, they're looking at how can they do some of those pieces. But it is a lot of discussions. And when the state of Illinois passed that, when they did it by municipalities, it allows us to, in their size, it allows us to look at some of those pieces. And even as Chief Nowacki can tell you, everybody's looking at what kind of, there's so many different cameras, there's so many different things that are out there, how you use them, the policies. We are part of Lexipol. Lexipol does have different policies on camera use and some of those pieces. So we're getting geared up for that. And even if someone said, okay, if 2024 comes here, you only did 75, 75, 75, you're still not at that piece, but we're allocating that money, getting ready for that annual piece. We're having a discussion at Northwest Central. Would they be the area that we could retain everything? Unfortunately, there's no consensus. That's my nice way of saying it, because Northwest Central doesn't want to be the conduit for everybody's body cameras, so that makes some of your other pieces. The rules that were passed, we're still evaluating, and the police chief's group has actually tried getting a rider bill. There was a small parts that were done, but we'll see how some of these other pieces shake out. There are certain municipalities that actually have the body cameras right now that they would be on the same stage that we're in 2024, 2025. They're actually talking about discontinuing them until everything's shaken out. So there's a lot of discussion still on body cameras, but we can only go with the information that we go right now. And I can tell you that we're mining for grants like everybody else, because any money to save for the body camera purchase, And we believe, it's just a belief, that some of these firms who are doing them, WatchGuard is one of them that we have hopefully they will look at, because we're a current user, maybe there's additional cost savings down there too. But those are all things that we know about. It's just how do you get to that piece, and the reoccurring, hopefully the state will come up with something else that retention cost will go down considerably.
Thanks, Manager Krumstak. And then Finance Director Gallagher, can you please maybe reiterate for the council that the recommendation that we receive from our actuary isn't necessarily negotiable? Like, we are required to pay what the actuary states is required for the tax levy, correct?
It is an annual recommendation, to your point, Alderman Sonoyka. The recommendation is per the city's funding policy, which we disclose in our city's audit, which is sent over to the credit rating agencies and the SEC and all the stakeholders out there. So when you have a funding policy, you should follow your funding policy, or they are going to look at that. To that point, these changes are to fund per the actuary. When I mentioned that it wasn't exactly the same amount, that is because these are the points that are included in that. So these two line items,
With the liability increase.
right, with the liability increase and the changes in some of the actuarial assumptions, these two line items bring us to the actuarial recommended contribution for this year. So that's why these are in here as an ask for the increase for the tax levy, if that makes sense. Thank you for the clarification on that.
Yes, thank you.
Alderman Bubbins?
And that's kicking the football down from 16 to 17 years, correct?
It's
So
still
we've
at a
already
7 year.
reduced the amount of our time period, or increased it by 1 year, reduced our payment by that amount. So we've already kicked it a little further down the field.
We're
and
better.
still come up with this number.
Yes, we're better than other municipalities, but we are going back to 17 years instead of doing the 16. Or as the council knows, when we went from 15 to 17, now we're holding at 17, if you want to say that we're still midpoint.
Thank you. And thank you for that clarification. I thought you were asking for additional than what the actuarium was asking for. So thank you. Anyone else? All right. So staff is asking for a straw vote. Do you want us to break it down on, how would you like the straw vote?
Can you take the first vote just for the 301,000 at 2%? And then if it fails, getting a majority, then we can break it by the pensions, by 911.
By each one? Sure.
Yes, please.
Sure. All right. So staff is asking for a proposed approximately of 301,000 or 2% increase year over year for the property tax increase levy. All those in favor? 1, 2, 3 in favor. Those opposed? 1, 2, 3, 4 opposed. So it didn't pass, or well, it doesn't really pass, but okay. So then staff is asking for us to break it down. Or maybe I should do it this way.
If you just do pensions,
Well, I think in discussion is that council is asking for, they're not opposed to these additions to the budget. It's the tax increase is what I heard in the discussion, that they're opposed to the tax levy increase, correct, council? Go ahead.
My thought is, if it's not the increase, how are we going to get to the numbers that are in front of us? So I see it as a combined thing. Unless we're just providing direction, it's a turn, or Director Gallagher can go back and look at like 1.5%, 1.75% increase. But I think we've already determined these have to be met by the actuarial, the fund policies, and the state law. So I don't know, are you looking to say 1.5 is okay, but not 2?
I think it was proposed that, that these be funded in another way other than a tax levy increase. So instead of going back and forth to a number, which I think we've done before in cows, go ahead, Alderman Bassesi.
Yeah, I just wanted to jump on what Alderman brought. My yes vote was basically based on that this is 2%. There's a starting point. It could go to 1%, it could go to 0. What I would say is by giving them approval for the 2%, they have something to work with. And then as we go through the budget process, that's where we can say, and we would give them direction along with the approval to say, you need to try and find another place for this versus a 2%. Now, you could, taking the other side of the argument, go with 0%, and when they can't find another place for this, then we go up.
Okay,
But I just wanted to
thank you. Director Gallagher?
say that we're not binding anything today.
Thank you, Mayor Pro Tem. And to address that, Alderman Bessesi, the chart that shows that incremental increase for dollars and percentages, this would be almost like spending authority up to 2%. We are looking for the property tax levy because those are the kinds of things that, when you think about for funding pensions, we don't typically look to other resources. It's the tax levy. The other two items, again, being the fact that we really need an influx for the refuse fund, for the 911 fund and the local road fund. Those two items, again, we're looking at the property tax levy as a resource because of the fact that we've got a plan, as Manager Krumstek mentioned, for body cameras, but we also have to think about where we're headed for the road fund to ensure that we have the roadways covered as far as revenues. So I think it's more just to help you as far as spending authority to that point, just as a
Sure.
starting point.
And I think
Okay.
if you look back in the packet, that will give you some good ideas, because a 0.5% is about 74,000. The 1%, if you just did the, obviously, $151,000, that's the 2%. But that gives you parameters if you want to say, hey, twos work below, so.
Okay, so then we'll take it and we'll break it down. I have no problem with that. So let's do 1% increase year over year tax levy. All those in favor? Nobody? Okay. All those opposed? So
Are you looking for either or? Because I was in support, no, that's what I'm asking. Like, I was
you guys
in
are making my job hard
I
tonight.
was in support of 2, because we have to remember, we held everything even last year.
Right.
But
So
costs
you-
go up, so we're making up for 2 years here. So I'm wondering, like,
So you.
are you asking for those in favor of 1? Because I'm in
Yes.
favor of 1, and I'll be in
Yes.
favor of 2.
Yes. Okay, but 2 didn't pass the straw vote, so the
Okay.
next one would be 1.
Okay.
Okay,
Right.
And this is
start
just
over.
parameters for staff to
Correct.
start working from.
Correct.
Okay.
Okay, so I'll start over.
Yeah.
Okay, all those in favor of 1%?
If you had your hand up for 2, you need to raise your hand for 1.
Am I not explaining it correctly, Director Gallagher?
Well,
Why
it
don't you
may,
go the other way?
it
Why
might
don't you
just
go
be,
from, I think 1.5 and then.
right, so, and I don't have 1.5 up there, but if you figure
Yes.
it.
That's why I went
It's
to
about
1.
0.5%,
221.
so 225,000.
Yeah.
So I think it might be, thinking of it as, again, it's just a parameter. And to
Correct.
start the discussion process when we get to September. If you want to see a budget that looks like that with a tax levy increase, that's what we would be bringing forward. Not to
Mhm.
say that there couldn't be changes along the way. That would be our recommendation, to start at the 2%. But if you would want to do some more incremental, where it's 1.5, and we start there, we can always build back to the 2% when you get the proposed budget. Remember, it's not like at the end of the day, this is what it is. When you get your proposed budget, if you feel like, okay, I would like to now, seeing everything, bring it back to 2%, or maybe it's 3%. I mean, it's really, at this point in time, I think, thinking about it as the 0.5% each way, maybe that's the better way to think of it. Does that
Thank
make
you.
sense?
Director Horn?
Oh,
I
was
know this
actually gonna
is
ask him
so
something.
out of my wheelhouse, but maybe the good direction is whether the council's in favor of staff looking at a property tax increase as part of the budget parameters to fund these issues, period. That I obviously think staff could then provide the scenarios you're looking for that can help you make that decision as part of the budget discussion. That way you don't have to lock in a number, because as they said, it could go up 0.5%, it could go down 0.5% based on their use of the number. So I think the real indication that I think staff wants is the council willing to consider a property tax increase to fund the things that we're talking about, correct?
Correct. Alderman Sonoyka?
Are you going to permit discussion first before that? Okay.
Absolutely.
Thank you. So I had mentioned earlier that I would not be voting in favor of any type of parameter increase unless I know specifically what would or would not be included with that increase. So as Director Horn has described this situation, and maybe that's what the rest of the council understood as well, I want to be able to go back to my residents and specifically state, if we don't increase, this is what we're missing, or this is what won't be included in this year, or how it will impact items like capital improvements moving forward. So if at this time staff needs to have the direction of what that would look like for that 2% versus that 0% increase, then yes, I would be in favor of that.
So the answer to that is, what we're looking for the 2%, so we can show you a budget that has that, because if we don't have it, we're going to be cutting and slashing just to get to that 0.
Right.
And then we're back into next year that we're asking for more. And for instance, the body cameras that we've been talking about, getting that number higher. The pension number, the liability will float again, no matter what happens. The actual will be back. But we can produce a budget with any number that you're going to talk about. 0, half, 1, 2. The 2 allows us to show you with the parameters in there. The 0, we're going to give you a budget that will show a 0. It's already going to be slashed and cut.
Right, and Manager Krumstock, I guess that's part of the discussion that I think the council would want to be involved with as well. If we have department heads that are already looking at those items and they know which projects will or will not continue as a result of whether or not they have funding, that is what I want to be able to communicate. At this, and I don't want city staff to have to make 2 budgets either. I think just having a couple of list items to say, if we don't have this increase, or we can't make any other interfund transfers, we can't do anything else in order to be able to cover certain costs in order to pay for that. And so that's the other items outside of pension funds. Is there no other way that we can legally acquire those funds in order to be able to pay for the items we've discussed that we need through state statute and so forth?
So you can use reserves, but then next year you're going to be making up that 125,000 plus the 26 plus whatever now comes up. So you're compounding what's coming back.
I understand that, and same thing with other projects and other initiatives. So that's what I would like to be able to demonstrate to others at this point, and something that I would like to be look through while you're going through this process as well, in order to be able to approve in September that increase, if it were to come.
And just to add to the conversation too, Alderman Sonoyka, remember that the budget process begins in September. This is really just the initial parameters. You don't have to make any decisions tonight. This was more just discussion to, get you thinking about things. In addition to that, you don't approve the tax levy until well into November. We have so many budget discussions, and we have the one-on-one discussions, and then you're going to ask us for information. So, we were looking at just to see if you would like us to bring back the budget with an increase so you could see what it looks like. You can mark it down to 0. Things have happened in that way in the past. But it's just right now to get that budget parameter so we can start working on scenarios. There have always been scenarios out there. In my time that I've been here, close to 15 years, we've always had a chart where you can kind of pick and choose along the way. I guess that's where this kind of devolved into, just because it is kind of nice to see the scenarios. But at this point, if we want to go down the pathway where we're looking at a possible scenario, we wanted to be realistic and bring you back a budget that showed that, not to say that you can't go back and change things along the way, if that helps. So I don't know if that helps with the direction or not, but.
Thank you. Alderman Bessetti?
Yeah, it's my last bite here. What I was wondering is, do we want to have them come back with, they got the 2%, but I think to Alderman Sonoyka's point, we need to be able to tell our constituents what that 2% is representing. So it's really, is this the list of things that would not happen if we decided to go with 0? I'm not thinking that's the case. I'm thinking if we decided to go with 0, you would have to take it from various different places. So I'm kind of wondering what it looks like at 0 and what it looks like at, like 2%, to be able to, and maybe I'm ahead of the process a little bit here, but.
Well, I want to help you make a decision. I think that the point being is, again, this is just budget parameters. And, to give you all those pieces, that's like presenting the proposed budget tonight. So I think this is just a parameter piece. I really think at this point, it's up to City Council to make the decision if you, provide us feedback on the direction for the property tax levy.
I'm going to kind of piggyback off of Alderman Bessetti. I was thinking that, I think at the 2%, we see what we're going to get. I think that's right in front of us. But what I think a lot of council here is questioning, if we decide on a 1% or a 0% tax levy, what does that look like? Because I can't answer, yes, 2% is okay with getting XYZ, but if I say 0, I don't know what that looks like. So, and I don't want staff, to Alderman Sonoyka's point, to prepare two budgets. But I think for us to make a sound decision, that we need to know what that 0% looks like and what we would really be eliminating to account for these four items, because the money has to come from somewhere other than a tax levy if we do 0. Am I correct, council? Does everyone agree with that?
That's more or less it.
Okay.
So then, if I'm hearing, I think Alderman Bryan.
Alderman O'Brien.
And that's like step 2 of the budget process. If I'm remembering right, the last 2 years being on council going through, we give the parameters, whatever it might be, and then that's what we do between now and November is see where the adjustments. Is that we say 1% and staff comes back and says, okay, that's a 0.5 percentage cut from Public Works, a 0.5 cut from someplace else to get to that. So I think this is just a starting point saying, yes, let's kick off the budget process, and over the next 4 months, we look at where these 1/4 and 0.5% are coming from.
Sure. So 2 did not pass. We can take a straw poll at 1 and see if that passes, and if it doesn't, that leaves 0. And we go back to my original statement that I just said. We can certainly do that, if everyone would like to do that. All those in favor of a 1% tax levy increase? 1, 2, 3. Did not pass, so we're back at 0, my original statement. So if Director Gallagher.
Just one more item, just to kind of remember that, City Manager Krumstek mentioned that when we come back to City Council with the proposed budget, it's just very mindful to remember that we would be coming back with a 0 for the proposed budget, with the option of the City Council directing staff to add things to the tax levy should the council wish to do so. We have public hearings to release the tax levy to the public within the newspaper, and those are the kinds of things. That's why we ask for this in the upfront budget parameters, because when we go out and we do a budget hearing, we have to say to the taxpayers, we're going out as a proposal to 5%, 3%, whatever the case is. If we're going to do a budget hearing at 0, then we're going to probably have to do another budget hearing, just so you know, just to stay within the state statute and following the calendar. So that's why we kind of sit and kind of parameter discussion. I just need you to be mindful of that, because those are the kinds of things. And in addition to that, we'll come back and let you know other items that you discussed tonight. Does that cover everything? Right, and that's my point, is the truth in taxation statute, we can always bring that higher, as we've done in the past. You've lowered, city councils in the past have lowered the tax levy through your discussions. This is not, until it's adopted by the city council, this is not the levy. This is just for discussion purposes. But that's why we have to do a truth in taxation notice in the newspaper, and then also a public hearing, so that it's very transparent to the public and to all interested parties. So.
Thank you. And I think as an older person to our residents, we can tell them we try, if it doesn't work at 0, we tried for 0, but we were going to have to eliminate XYZ of services, and then that's why we had to raise it if that's what happens. But without having that information, I know as an older person, I can't explain, we just did 2%.
Right.
I can't justify that this year. So, Alderman Sonoyka?
Thank you, Mayor Pro Tem. So I have a question for Attorney Wolf. I feel like there's some miscommunication going on between the council and staff at this point, because it sounds like staff just needs this straw vote in order to be able to provide this information to us, or the information that we desire, which is here's what this budget looks like when it's slashed, and here's what this budget looks like with with some wiggle room, and these are the specific things that or what it would look like if we were to really slim down, or take money from other places. If we don't provide that 2% right now, are we prohibited, or is staff prohibited from providing that example for 2% to us, or is there some other type of reporting that we don't understand or we're missing here?
No, and you can correct me if I'm wrong, Manager Crumstock and Finance Director Gallagher, but no, this is staff's opportunity to get the input from the council so that when they present the budget to the city council, they're not going in contravention of the council's desire. I'm hearing from staff that the best process and the recommended process is to give them the leeway to prepare a budget with a maximum 2% increase so that they can itemize the projects and needs of the municipality. And then at that time, if council lacks the desire to make that increase, they can at that point determine which items are going to be reduced or cut or fundings transferred so that you can get to either a 0% budget increase or property tax levy increase, or anywhere in between 0 and 2. But it sounds like staff is requesting that they have that 2% leeway for a recommended property tax increase with a max of 2%, so that they can design a budget and you'll be able to see what projects are funded by that and what can be eliminated by that. They understand that it's the council's desire, based upon the expression that a property tax increase is not favored, but maybe necessary. And I think the best way for the staff to provide the city council the information that they're looking for, with respect to what projects would be lacking, is to allow them the opportunity to do the budget with their recommendation of the 2% property tax increase, and then cut it down with the input from council, because council will have input before those public hearings take place. It'll be presented to the council on, Melissa, how many times is it? Is it 2 times the draft budget before it goes to a hearing?
At least 3.
Okay. So council will have input during this process before it goes through the hearing and approval for the property tax levy increase.
Thank you for that clarification. Then I would move to amend then our next straw vote to be that that the council is in favor of a 0% increase, but will then grant the 2% leeway for planning purposes throughout the rest of the budgeting process.
Second that.
All of them. I don't think we need amendments.
There is no second. There
It's
is
like
no
10. Okay. All of those for a straw vote in favor of Alderman Sonoyka's amendment. Okay, that's 7 in favor, none opposed. Staff has their guidance or their recommendations
Yes, thank you.
from council?
Mhm.
Okay. Then there was a second one, Director Gallagher, on
Just
here?
to close out, again, thank you very
Okay.
much for the time tonight in the discussion. It's really helpful as we plan and as we go along. Just to kind of keep an eye on the ball as far as the planning purposes, again, the capital improvements program will be presented at the August 17th Committee of the Whole meeting, and at the September 14th City Council meeting, we release the city's budget. And then our first discussion with City Council will take place at September 21st, Committee of the Whole meeting. And of course, there are public hearings and along the way. And at this point, we always just like to turn it back if there's some initial thoughts on the council's end as we start to, again, prepare items for the proposed budget. If there's a list, and it doesn't have to happen tonight, but if there's something that you want us to make sure we're looking at, all the items that you mentioned, Alderman Sonoyka and Alderman Veneziano, just please let us know.
And the other caveat that we do want to remind people is that there might be, and that's what we're planning for, a manager's hold, because obviously the environmental committee is new and there's a potential they might be asking for some projects. And as 2 of you up on the dais know, the economic development seems that they want to spend some money on some design presentations, but that will all be evaluated as we look at the budget.
thank you. Is there any other comments from council? No? All right, is there a motion to adjourn?
No, we got one more.
Oh my gosh, it's late. Okay, Director Horn,
It's only
2800 Brockway recapture discussion. See, I won't be asked to be drum again.
Don't worry, City Council. I only expect this to take about an hour, so.
Oh my goodness.
Yeah,
What, no
if
slides?
if I'm past 10 o'clock, I should be let go. This item is brought to you on behalf of a resident, Mr. Belagambe. He lives at 2800 Brockway, and he is requesting a recapture agreement be established on his behalf. For those of you who are new to the City Council and may not have heard that term before, a recapture agreement is when a private, well, even a municipality installs a public utility, in our case, water, sanitary, or storm sewer, across what are called benefiting properties in an effort to serve their own needs. But a future property or the benefiting property will be able to take advantage of those improvements. That is called a builder or a contractor can set up what's called a recapture agreement. That recapture agreement, through the conditions in the city code, set forth parameters that allow staff to come up with criteria to be able to charge those benefiting properties a certain cost to be able to connect to that public utility to help the initial installer pay for the improvements. So in regard to this specific case, we worked with Mr. Belagambe for about 3 months. We established with him a program that, a recapture agreement that will last 10 years. The city code allows a 10-year recapture, plus upon one request, the city council can increase that an additional 5 years. So the maximum the recapture agreement will be in effect is 15 years. If no one ever hooks up to the sanitary sewer, he doesn't get any of his money back. We worked with him and established a $79,700 is available to be recaptured. Of that fund, $64,821 is going to be is able to be recapturable by the benefiting properties. So the way it's calculated is done by square footage of property. So Mr. Belagambe's property was included in that calculation. So as it indicates on the last page of the memo, Mr. Belagambe is responsible or will always have had to pay a minimum of approximately $15,000 for his portion of that sanitary sewer installation. I should have mentioned Mr. Belagambe installed an 8-inch sanitary sewer main, approximately 405 feet up to his northernmost property line, which is required by city code. That sanitary sewer main has been tested, inspected, and approved. So we have that currently active and in service. This item will, obviously staff is supportive of this. We had several recaptures throughout the community over the last several decades. It's my understanding to date there's none. So this will be our first one back active. Yeah, the terms have expired. So, I just wanted to prepare you for this because I know it will be new to a lot of you, and I wanted you to make sure you understood and had an opportunity to ask questions. At that when we do bring that to the meeting in July, I'm not sure if it will be the 13th or the 27th, I believe it is. We will also be bringing for the first time to this city council something we talked about when we talked about water main ownership. We will be bringing a resolution to publicly accept the sanitary sewer as public sanitary sewer main. So Mr. Bellegambe will provide a bill of sale. He will provide a written request for acceptance, and staff will prepare a resolution. And that time, the city council will accept that public utility and take formal ownership of it. So we will then be responsible for all future maintenance of it, which is really the way it should happen moving forward. So both of those items will be brought to the same meeting. I'm done with my presentation. So if you have any questions, please let me know. And this was the last presentation of the night.
Any questions? Alderman O'Brien.
And I promise you mine will be less than your presentation was, Director Horn. Okay, so Mr. Bellegambe was put out the 79,000. I'm just trying to understand the process here, since it is the first one for the city that's in our terms. So he's the person that put out the 79 grand. When we take over ownership with the agreement, we would be recapturing the money from those residents. Who's that? Like, where the money's going from Mr. Bellegambe to his neighbors back to him to recoup his costs?
No. So the way it works is if Mr. Bellegambe is out the money, it's installed, it's done, it's serving his home only now. Let's say his neighbor, 3 years from now, their septic system went and they wanted to connect. That resident would be responsible, all the regular fees, connection fees, all the permit fees, construction fees to tie in. In addition to that, they would have to pay the recapture fee as shown on the second page. So for example, if 2801 connected, they would pay all their normal fees plus $20,491, which the city would collect, and then pay Mr. Bellegambe.
Okay.
We are simply the mover of the money.
Okay.
So we collect it, and we agree to pay it within 30 days. Usually is the required time period.
Okay.
So we're just a pass through for the money.
Thank you. That helps.
Thank you. Alderman Budmats.
Are all of these properties located within Rolling Meadows?
Yes, these are. I believe they are. I believe they are. Yes.
Do we have any devil's advocate? If one of them were in unincorporated Cook County, would we have any authority to enforce this?
Well, it's our public main, so we would only collect the money when they connected to it. So we are not forcing residents. My understanding is the policy of the city to not force residents to connect to the public utility. So if they have a working septic system, they're good to go. We are not going after the money. We're only collecting the money when they decide to connect to the main sewer main on their own behalf. So then we collect the money. So if for the next 15 years, that resident that you're talking about that doesn't live in the city, if they don't ever connect to the sewer main, they will never have to pay that fee. They'll only, if it happens 20 years from now that they connect, they'll only have to pay the city fee. And we won't be collecting any money on behalf of Mr. Bellegambe at that point.
And follow up,
Sure.
Are we aware if the cost that Mr. Bellegambe paid was fair market value for what he received?
Yes, absolutely. We collected all the receipts, all the certificates of insurance. There was a lot of back and forth. There's a percentage increase, I think it shows on the last 3%. Part. There's engineering that's permitted. So we collected all that data. As I said, we worked with him for about 3 months to get the number to accurately reflect what he's actually permitted to recapture. So we definitely, there was a reputable contractor that installed it. We did inspect 100% of it, so it was done appropriately.
Thank you.
Yes.
Any other questions, comments? No? That is the last item on the agenda, correct?
Yes.
Okay. All right, is there a motion to adjourn? Anybody? 1, 2, second?
You got to use the name.
Oh, my goodness. Alderman O'Brien for the first. Budmats for the second. All those in favor, say aye.
Aye.
None opposed? Good night.